what exactly is GHL India about? Where does my money get invested? How does one investor look at this product from the safety perspective?
Investors are earning every month 2%. Our property flipping business happens in 3 phases. Per annum, we are making 60% profit. It is very easy for us to distribute 24% per annum to our investors. Master plan describes everything. Just after 1.5 years, it has reached 18 crore rupees.
How this 24% is realistic? If I am getting it correctly, you're saying there is 0% default till date.
We are mitigating the risk of selling. We have ready buyer. The market size of the financially distressed assets across Tamil Nadu and Puducherry put together is 15,000 crore rupees. Even if you earn 12% per annum, you cannot beat inflation. The answer is simple, Zain. To make money.
So when we talk about investments as a piece, the first thing that typically comes to our mind is what our parents taught us, which is fixed deposits, put your money in FD, or the new transition is start doing SIP in mutual funds. One of the forms of investment has also been gold, because as an Indian, our mindset is gold will always reap you benefit or returns, either be it wedding or as an investment tool. But overall, we have been going through a lot of transition when it comes to the investment product. And one such new asset class that is gaining a lot of traction in India is property flipping. And talking about property flipping, one of the leaders in this particular space is GHL India. And today I have Mr. Karthikeyan Dhayalan with me, who's the director of GHL India. Let's start by understanding what this product is. Sir, thank you so much. It's a pleasure to have you.
Thank you.
So, Karthik sir, before we get into what the product is all about, first I just want you to explain it to the viewers who are listening for the first time. What exactly is GHL India about?
GHL India Asset is an investment and asset management company.
Okay.
We do investments in the property flipping business, wherein we acquire undervalued properties at discounted price. We develop and sell it at a profit to our construction companies. So this is our business model. We have been successfully running this business for the past 4 years with 0% default.
Just to further elaborate, how did this particular asset class even come to your mind? Why the moment I think about, let's say, starting a new business or be it in the finance space, I would always want to stick to something which is very traditional, because that is easier to, it's an easy job to do. But when we talk about as an asset class, which is a new asset class, why did you think of starting this particular business?
The answer is simple, Zain. To make money. When we solve small problem, we can make minuscule money. If we can solve big problem, we can make big money. We wanted to make big money. So our product is solving immense problem of many people. That's why we chose this product.
What is your core product? Like, if I were to explain this to a new investor, right? I've not invested with GHL India yet. What is the core product that you primarily offer to an investor?
To investor, we are offering secured NCD. Before we started this company, we had encountered n number of investors. We analyzed their mindset and we came to a conclusion about their needs. There are only 2 essential needs of any investors. One is capital security, and another one is regular cash flow. So we created this product to satisfy these 2 essential needs. Through our secured NCD, the capital is protected by means of tangible asset, and with our fixed income, investors are earning every month 2%.
Can you explain, if tomorrow I invest 1 lakh rupees with GHL India, where does my money get invested and what happens in the back end? Number 2 is, how do I get my returns on that 1 lakh?
The investor money is being invested in property flipping business. Okay? Just to protect the business we have created these 3 phases. In the first phase, what we do is we will identify financially distressed seller. We will sit and negotiate the terms with the seller, and we will cut down the market price of the property up to minimum 30% and maximum it may go up to 60% too, based on the pressure of the seller. We will evaluate the title deed of that particular property to find any encumbrances out there. If there are encumbrances, then our real estate team will identify the steps to resolve those encumbrances. After that, we will execute a sale agreement with the seller by paying 10% token advance. This is the first phase. So once it happens, in the second phase, we will start to identify buyers. Buyers are construction companies. Either they may be a residential builder or commercial builders. So with this sale agreement, we will approach the buyer and we will negotiate with the buyer. Once the buyer accepts to purchase the property, we will get 30% token advance. We can call that as a earnest money deposit from the buyer. Then we will execute sale and purchase agreement with the buyer too. Once these 2 phases are completed, we will launch the plan in our platform to raise the remaining funds that is required to complete this project. Okay. In the third phase, we are launching the plan in our platform by issuing the secured NCD. We are mobilizing the funds. Once the funds are mobilized, we will register the property in the particular special purpose vehicle name. Then we will create mortgage with the debenture trustee. Meanwhile, we will start to do the developmental activities. Once the developmental activities are done, the property will be completely sold to the buyer. So how we are giving this fixed 2% return is by receiving the 30% token advance from the buyer. Once the property is completely flipped, we will realize the capital gain. That gain will be utilized to buy another property. So in a year, we are flipping minimum 2 properties like this. In each property, we are making minimum 30%. Per annum, we are making 60% profit. So it is very easy for us to distribute 24% per annum to our investors.
The way you explained that you typically take a distressed land or let's say a distressed property, buy it at a great discounted price, and the idea is once you raise capital for the balance amount of the for the property, that which is in the form of secured NCD, that is the time you typically that's how you give it back to the investor in form of returns.
Yes.
After completing the property and typically selling it at the premium.
Yeah.
My question is how does one investor look at this product from the safety perspective? Because you are trying to give 24% from this 30% upfront payment that you get from the buyer, right?
Yes.
What happens in a scenario where the buyer does not give a 30% token? Is there?
We won't enter into a deal like that. Once we finalize a buyer, we will get this 30% earnest money deposit. Once we receive that in the company's bank account, we will start issuing the secured NCD of our company to mobilize the remaining funds that is needed to complete the project. So this is our strategy. We won't breach it. It will never happen.
Okay.
Mainly, Zain, we choose properties in Tier 2 cities of Tamil Nadu and Puducherry. Tier 2 cities are in an expansion phase of the real estate market cycle. Real estate market cycle has 5 phases. One is bottom phase, another one is recovery phase, and third one is expansion phase, and fourth one is early downturn phase, and fifth one is full downturn phase. When we choose properties in expansion phase, there will be no liquidity issue. The demand will be high. The per capita income of that particular location will be high. So people are willing to invest in physical assets. Since we choose properties in that location, we can easily find buyers over there. we can easily flip properties within a short span too. So to choose properties, what we do is we will refer the master plan of the respective state government. Describes how to use lands in particular zone based upon the current fixed and floating population rate, current employment and future employment rate, current demand of land and future demand of land based on the population growth. So if we go through the master plan of the respective state government, we can easily analyze which zone is in expansion phase. There we should go identify financially distressed assets to make good profit. If we are choosing properties in expansion phase, we don't even have to identify financially distressed assets. Normal assets are enough to make good profit. Since we are choosing financially distressed assets, we could easily make 60% profit per annum. It is very much possible.
Just a follow-up question on that, because the moment I hear returns which is up to 24% or returns upwards of 20%, in your case you're delivering returns up to 24%. So now the moment any investor typically comes across a product which is delivering high returns, it is always associated with risk, or it's typically not believable or too good to be true in that scenario. I'm sure you would have faced a lot of questions pertaining to this, that how are you delivering up to 24% returns in products which are like secured NCDs, where something which is considered safe or a highly secured NCD is delivering up to 12-13%, or mutual funds for that particular matter, equity markets are delivering 12 to 14% in that respect. In this particular product, like a assured return, or let's say returns which are aiming towards 24, sounds risky. How do you typically answer this particular aspect of safety, and how is this 24% possible, and what is the margin of safety here?
This impression has been created by many financial advisors among the people's mind. If somebody offers more than 12%, then it is risky. Without even analyzing the company's product, they will simply say it is risky. Don't go after it. You will lose your money. Not like that. There is a law that governs money supply. It is called as law of compensation. This law dictates the amount of money that we earn is directly proportional to the need in what we do, our ability in doing it, and the difficulty that is in replacing us. Okay. If somebody makes just 12%, the need is very less. If somebody makes 30%, the need is very high. If somebody makes 100%, the need is immense. Since our product solves the major problems of 4 set of clients, it has immense demand in the market. One is qualified investors who want to grow their money, and another one is financially distressed seller who want to come out of the distress, and third one is lenders of non-performing assets, and fourth one is construction companies that want to build properties at prime location. As we spoke about the law of compensation, here it works very well. The demand is high, our ability is also well to handle this product. Since we are irreplaceable in this market, we are making good amount of profit. So, in real estate, making 30% profit, 50% profit is really easy. People are not disclosing it, but that is fact. When we can identify property at proper location, after doing this analysis, real estate market cycle analysis, and referring that cycle analysis with the master plan of the respective state government, we will be able to choose property that can give humongous profit. That is what we are doing. We have already flipped many properties. One property which we chose in Puducherry is located very close to the proposed film city, 100 acre. As soon as It's a residential property. When we bought, it was 5 crore rupees. Just after 1.5 years, it has reached 18 crore rupees. Because the activities of Film City started happening. Due to that, here demand has risen. Property price is also upsurged. So location matters.
Yeah.
To choose proper location, we should do many analysis. Since we have in-house research and development, a product team, we do all this analysis. We do pistol analysis to understand the micro and macro economy. We do real estate market cycle analysis to choose properties that are in the expansion phase. After coming to data, we will refer that data with the master plan of the respective state government. Then we pick property.
Got it.
It hasn't failed. It has given surprised profit too.
Got it. So, I was going, my next question to you was primarily how do you identify these distressed properties? Because I'm sure it requires a lot of research. Second thing is how fast you're able to churn that property.
We have more than 2,300 real estate business agents across Tamil Nadu and Puducherry. They are working as freelancers for us. Through them, we are identifying the distressed assets across these two locations. Since we choose financially distressed assets, the financial encumbrances that are involved in the property will be resolved within 40 to 60 days. After that, the property will be purchased, it will be developed and sold to the buyer. So the maximum timeline will be 8 to 9 months to flip one property.
Understood. And in this entire flipping process, property flipping process, what is the minimum tenure that a person needs to invest for?
2 years.
Okay. And what happens, for example, if you've raised money, you made a project public and you've raised capital through investors. Now, after 9 months, when you have already made money, what happens post 9 months? Because as an investor, my money is with you for 2 years. So what happens post that?
The first property will be flipped within this 9 months. During flipping, we will realize the capital growth. We use the same capital to flip 3 more properties in this 2 years tenure. So we need this 2 years tenure to flip 4 properties to make good profit. As I already said, we are making minimum 30% profit by flipping one property. We are offering 24% per annum to the investors. How can we make it possible? We need to flip more properties in this 2 years tenure. So if we can flip 2 properties in a year, we will make minimum 60%, out of which we are giving 24%. So in 2 years tenure, we flip 4 properties. We are making 120% profit minimum, and we are giving 48% in this 2 years tenure. This is the business model.
Now able to visualize, how this 24% is realistic.
Okay.
In these 4 years, what is the default rate? I'm sure there would be some NPAs and there would be some defaults, I'm assuming. But is there any default? If yes, what is the percentage of NPA as of date?
Are you asking in terms of GHL India's business?
Yeah.
There is no default. We are maintaining 0% default.
If I am getting it correctly, you're saying there is 0% default till date.
Yes.
What is your NPA percent?
Non-performing assets percent.
Yeah.
It is nil.
It is nil.
Yeah.
So that means that every property that you have invested in, you've been able to successfully flip that.
Yes.
And generate returns for the investor.
Yes. Listen, with ready buyer only, we will launch a plan in our product, in our platform. So there is no chance for us to default.
Just to counter the same response, every product in India has some sort of risk. Mutual fund investments are subject to market risk. in FD there is an insurance which is up to 5 lakhs, and people are still worried that if I have a higher amount, my amount is just secure till 5 lakhs, right? So risk is a part of every asset class, and in India we have seen the top of the NBFCs also, who were AAA rated, also defaulting. What is the number of, or what are the risks involved in this product, just from an education perspective?
Okay.
And as someone who's been there in the business for 4 years, for you, what are the risks and how do you mitigate those risks?
In any business, creating a product is easy. Selling is difficult. So in real estate too, creating a product is easy. Selling will be complex. So that is the risk when it comes to property flipping too. Since we have structured our product in 3 phases, we are mitigating the risk of selling because we have ready buyer. After identifying the buyer, we will start to issue the secured non-convertible debentures to the investors to mobilize the required funds to purchase, develop and sell the product. Since we have ready buyer, that selling problem has also been mitigated.
Understood. And what if the buyer, even though he has paid the token amount, walks out of the deal?
Here the property prices varies from 15 crore to 20 crore. If we calculate 30% token advance, it comes around up to 5 to 6 year. Who will withdraw from the deal after paying 5 to 6 year? It will not happen.
Yeah.
In case of the buyer's demise, a little bit of challenge may arise. But with the existing real estate business agent connection, we can easily find another buyer in 40 to 60 days timeline. So we can sell the property. Since we choose property at prime location in the tier 2 cities, the properties always have immense demand. There are many competitions to tap the property. Okay, we should be in an exclusive network to buy those properties. Our GHL India as a team or in that network, so we can buy, sell without any hindrance.
So as of now till date, currently how much money are you managing?
We are managing 205 crore rupees.
Okay. And out of that 205 crores, or the entire amount is invested, or are you sitting on cash as of now?
It has been invested.
So in every investment, you have some units allocated. In let's say fractional ownership pertaining to real estate, people feel that they own that particular land. How does this entire investment work? I understand you're raising funds through NCDs, right? But what is the documentation given to the investor as a proof?
Non-convertible debenture certificate will be given. If the client offer demat credit of NCD, it is also a given from our end. Besides that, debenture agreement will be given. Acknowledgement letter of fund receipt will be given. Moreover, debenture trustee will be appointed, and on behalf of all the investors, property will be mortgaged in the trustee's name. That mortgage deed will be shared with the investors. Above that mortgage deed will be registered with the Ministry of Corporate Affairs through a process called charge creation. When it comes to fractional ownership, investors are investing in equity shares of a company. They cannot expect capital appreciation after 4 or 5 years. Based upon that market scenario, property price may decline. They cannot claim the same capital that they invest in the initial stage. When it comes to our secured NCD, whatever they invest will be paid back at the end of the 2 years tenure. That is one major advantage secured NCD has. Okay.
And who's your trustee?
Concord trusteeship.
Okay. And is this trustee known as the escrow trustee in your case? Does the money go in an escrow account, or does it get credited to GHL India?
No. the funds will be raised in a special purpose vehicle. Special purpose vehicle, you know about it. It's a separate legal entity. For each and every project, we will create a special purpose vehicle. In the bank account of that particular SPV, the funds will be raised. Debenture trustee will have the access to that bank account. So they will monitor every now and then how much fund is raised, for what purpose the fund is being withdrawn. So, this mode of operation is more secure than maintaining escrow account.
What is the minimum ticket size that an investor need to invest in?
Here the minimum ticket size is 1 lakh rupees.
Any plans, because you've been doing this for 4 years, and for 4 years the minimum ticket size has been 1 lakh rupees,
Okay.
right? Any plans of reducing this ticket size?
No. We cannot reduce the minimum ticket size because we are the only one company, not only in India, across the globe, that offers this level of security along with the returns. The returns part plays major role here. 24% per annum with capital security. Investors should not hesitate to invest minimum 1 lakh when they get this level of security along with the reasonable returns. So we don't have any plan to reduce the ticket size. Maybe in future it will get increased.
For somebody who will be investing now, looking after your interview, what are those projects that are currently on that you've typically picked up at this particular time?
As of now, we have launched NCD sequel 8 in our platform.
Okay.
We are going to buy a property at Erode. It's a tier 2 city of Tamil Nadu. So we are mobilizing 16 crore rupees to buy a land, DTCP approved land. So if the investor wants to participate, they can invest minimum 1 lakh rupees in that particular plan.
So let's say, as an investor, if I want to invest with GHL India in your current project that you just stated, can I see the documents of the project?
Yes, you can. You will have to contact one of the sales staff at GHL India. They will share the specimen documents of the current plan. You can go through it. You can cross-check it with some real estate attorneys too, to check the authenticity of it. Later, you can invest in our platform.
Because you're primarily in the business of real estate, and in India, buying real estate itself is also considered as a challenge, primarily because of the entire legality that is involved. So if, as a layman, if today I'm buying a property worth 3-4 crores, I will have to at least spend a decent amount of money in validating those documents, or typically having lawyers in place. In your business, you typically are only dealing in property flipping. So I'm sure that would require a huge legal team or a legal firm, right? So
Yes.
Can you just explain that bit of how do you manage the legality aspect?
As one of the co-founders of GHL India Asset, is a civil advocate. He has his own team. That team consists of around 200 attorneys. They are experts in real estate matters. So with the help of them, doing the real estate legalities seamlessly without any issue.
Understood. I think a team of 200 itself speaks for the
Yes.
amount of time, bandwidth, effort, everything that you guys are putting in the picture. So I'm sure the entire process that you frame around things is airtight with this particular bandwidth of any particular experience you've or challenge you've ever faced pertaining to the legal documentations.
Our real estate attorneys will analyze the past 60 years mother deed to check any encumbrances are available. If the chain of ownership gets missed in the mother deed, then we will not enter into such deals. The chain of ownership should be very clear to create a title clearance report. Along with the analysis of 60 years mother deed, our real estate attorneys will cross-check the encumbrances certificate.
And let's say if the documents are not clear, you typically don't go ahead with it.
Simply.
Talking about the UAE market, right? Because when we're talking about real estate, the entire India is attracted towards investing in the UAE market. Now, for you, somebody who's investing in distressed sale or let's say upcoming project or something which can turn into gold, right? So what happens in that scenario where the entire UAE markets are booming and you are trying to cover as many in the Indian markets? Is there any plans where you want to enter the UAE market?
As of now, we don't have any plan to enter into UAE market. We have built a strong network across Tamil Nadu and Puducherry. The market size of the financially distressed assets across Tamil Nadu and Puducherry put together is 15,000 crore rupees. Our primary focus is to tap minimum 15% out of the total market size. It amounts to 2,250 crore rupees. With the existing team and resources, we will be able to accomplish it in the next 3 to 5 years. Only after achieving the set target, we will think of moving into different states and different countries too.
There would be platforms typically offering very similar sort of products. So if somebody was to compare GHL India and somebody wants to compare other XYZ company, what is the due diligence that he needs to do?
An investor should analyze the demand of the product, and then they should analyze the founder's profile. Then they should get clarified about the market size of the product. Who are the end users of the product? What kind of marketing and sales strategy that the company uses to sell this product to the end users? So these analysis should be done. Most of the people do not want to do this analysis by themselves. So they simply depend on financial advisors. The financial advisors too won't do such analysis. They will simply see the balance sheet, profit and loss statement, cash flow statement. That's all. They only see the numbers. But behind the numbers, there is a product that must be analyzed. Consumer of the product should be determined. Okay, so this analysis must be done. After doing this examination, investors should also think of how to secure his capital. If any platform offers capital security, then they should give the first preference to that company. There, instead of diversification, investment should be concentrated. It is also a myth. Diversification is a myth. Richest people in the world seriously do not diversify. They will concentrate in one product. They will become a proficient in that one product. Then they make money out of that one product. For investment too, it is applicable. If you find any good product, you should concentrate your money over there. You should not diversify it. So that's how investors should analyze.
I think that's a great point. What everybody's talking about diversification, and that's a great take, I must say. Investors looking at this product for the first time, right? What is your 30-second pitch of why they should look at this product?
Our business strategy. Because we have structured the business strategy in 3 phases to mitigate the risk of losing the capital of the investors. After executing the business strategy, additionally, we are giving asset as collateral to the investors. So to experience the capital security along with the returns that we offer, investor should prefer to invest with us. Everybody talks about beating inflation. Even if you earn 12% per annum, you cannot beat inflation. Okay? The returns should go beyond 18% to beat inflation. Since our product offers up to 24% per annum, investor can easily beat inflation.
So, sir, before we end, what knowledge that I could gain or understand about the product is you have 0 default till date. Over the last 4 years, there has not even been one single case of default. That means you're maintaining a 100% success rate, not just with the capital protection, but even the returns delivered. You guys have a huge legal team, so the process is airtight. There is no current assets that is non-performing. Every single property that you have invested, you have successfully flipped that over. Still, with looking at the conservative mindset, if still someone has that hesitation of going ahead with GHL India, what would be that one last message? Why should one invest with GHL India?
Don't settle with 12% returns. Go for higher returns. Listen, what else an investor needs apart from capital security and reasonable returns that could beat the inflation rate very easily? As GHL India offers minimum 1.5 times the value of the raised capital as security, along with 24% per annum returns, investors must invest with GHL India.
Just for viewers to summarize, all this while we've been very happy with, we've considered that high returns is risky, or let's say the moment you hear anything above 12%, you need to be a little cautious. But GHL India is trying to break that entire myth, that entire bubble that we've been in. So to all the viewers out there, do your due diligence, understand the product, and look at why 24% can also be safe. So this was our conversation, and thank you so much, Karthik. The session was very, very insightful. It was a pleasure having you here.
Thank you, Zain. Thank you.
Thank you.